I'm Megan Grebner. We're at CattleCon 2025 in San Antonio, and with us is Randy Blach from CattleFax, one of the most popular sessions here at CattleCon. Let's talk cattle inventory numbers and where we're headed in 2025.
Well, we didn't get very many surprises on the cattle inventory report. We expected we'd be nearing the low in the beef cow numbers, and we believe we're there now. We expect to start to see a little more heifer retention unfold in 2025, and obviously, as we hold heifers back, we're going to see some reductions in fed slaughter in 2025 and again in 2026. So I would say everything's pretty well on track. We expected that this would be nearing the end of the cycle highs from a price standpoint, but the low in supply will not be until 2026.
Been a couple of really big weeks of reports. Cattle on feed came out, and then cattle inventory. How much are you watching that percentage of heifers on feed in those quarterly reports moving forward this year?
Oh, that's a big deal. You know, we always watch the number of heifers that are going on feed. It helps us give a good gauge on whether we are seeing expansion take place or not. I would remind all your listeners out there and followers that we have to make the adjustment in here because that number doesn't mean the same thing it did 5, 10, 15 years ago as a result of more beef dairy crosses that are on feed. Again, it skews those percentages, so the heifer numbers look bigger than what they actually are because of the inclusion of those cattle. Again, I would say they have to adjust about 2% from what we would have looked at over the last 30 to 40 years.
So we're talking a little bit of inventory. Let's talk price picture as you look ahead to 2025. Where are we headed?
Well, the market's off to a strong start. We've had a big push in these price levels in here really since the lows that we made back in August. The market's had a big push. If I remind your viewers here, the futures traded back to 175 in August, and we've just pushed up in here to nearly 210 with the April contracts. So the market's had a big rally since the late summer lows. We've been sold cattle up in here in the low teens in the north and the southern markets. So we've got a lot of the push in here. I would say the markets will average strong in 2025. We'll average between $1.95 and $2 on fed cattle, but that would tell us we'll have ranges from $1.85 to $2.15. So, I mean, there's going to be plenty of volatility for everybody to deal with here in 2025 and 6.
Just one last question as we wrap up, Randy. How important is the consumer demand to this price picture?
Well, consumer demand is really what's driven the whole market situation. I mean, if we hadn't done such a good job of focus on quality as an industry, we wouldn't have prices close to where they are today. I shared with the audience today that the beef demand growth that we've experienced in the last 25 years has been worth $800 a head. I wouldn't say that if I wasn't very confident that that's the correct number. So it's a big deal. And again, you take $800 a head, that's the lion's share of the profitability we're seeing at the cow-calf levels. So it's paramount. Our business doesn't operate if we're not building the right kind of product that satisfies those consumer demands, and it tastes great and it's consistent day in and day out. So congratulations to all you producers out here that have spent your lifetime improving the quality out here. Our consumers love it and they're responding.
Randy, thank you so much.
My pleasure. Good to be with you.
I'm Megan Grebner with Brownfield, reporting for Cattleman to Cattleman.